Once inflation comes down, we can restore purchasing power, we can cut rates, and we can begin to put growth policies that will grow the economy at 8 to 10% on a sustainable basis. So that's what we really need to do. By doing that, we will lift 140 million Nigerians out of multidimensional poverty.
You're welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. This edition, we'll be looking at geopolitics, oil price shifts, and the outcomes for households and businesses in 2026. On February 28, 2026, the United States and Israel carried out joint strikes on Iran. The consequences were severe. The death of the former spiritual leader, Ayatollah Khamenei, senior military officials, and of course, the destruction of significant military infrastructure. Iran retaliated with attacks on Middle East allies of the United States and Israel and American military bases in these countries. The effects have been very devastating, from Saudi Arabia, Oman, United Arab Emirates, Kuwait, and Qatar experiencing various levels of energy infrastructure destruction and force majeures declared. This has led to global energy value chain disruptions. At the 144th anniversary and Founders' Day ceremony of St. Gregory's College, Mr. Bismarck Rewane was a panelist in discussing the context of the global geopolitical developments in the Middle East and the impact on economies like Nigeria. Let's watch.
5 years ago, when Putin went into Ukraine, everybody talked maybe 1 week, maybe 2 weeks, maybe 3 weeks, maybe 4 weeks. 5 years later, there are still bombs in Ukraine. So, my fear, and I'm happy that the government is listening, is that we should prepare for those shocks, and that this is not going to be a quick fix. The price of oil went to 120, came down to 79, it's going back again. We just do not know what is going to happen. But there is a correlation between those shocks, the global financial system, and the Nigerian economy. In 1974, the integration between Nigerian economy and the rest of the world was maybe about 10%. By 1998, it was almost 20% after debt rescheduling. Today, it's more like 54, 55%, which means that anything that happens in the global economy has a more than profound effect on the domestic economy. This is no longer a Robinson Crusoe economy. This is an economy that is integrated with the rest of the world. It has its upside, it has its vulnerabilities. So I think, first and foremost, the Nigerian policymakers have to play defense. You have to protect that which you have. The buffers that are there were not for the sake of buffers. It is to protect you from situations like we are in today. If not, the currency would have gone to tatters in the last 2 weeks. Also to note that whilst theoretically an increase in the oil price should increase our revenue, reduce our deficit, strengthen our currency, but we're on both sides of the action. And that whilst on one hand it will increase your revenue, you remember that you have also pre-sold some oil. So if you've pre-sold the oil and the price goes down, right, you are in the money. If you pre-sold the oil and the price goes up, you're out of the money.
Just for insights, the Strait of Hormuz, a major maritime logistics route for the movement of energy-laden cargoes, is currently closed by the Iranian government, leading to additional freight costs and supply chain disruptions. With Brent crude currently hovering over $100 per barrel, and the newly sworn-in Ayatollah Mujtaba Khamenei and the Iranian government reiterating that that Strait of Hormuz will remain closed, the hostilities in the Middle East has impact on global refining, international crude oil price, crude oil production, business operations, and energy pricing for consumers. In Nigeria, the pump price for premium motor spirit has risen to the range of 1,200 naira to 1,200 naira per litre. And experts and commentators believe this would have been worse for the country if the Dangote Petroleum Refinery was not operational?
The only way to look at it is to imagine how it would have been if you didn't have a Dangote refinery. So in fact, I look at it from that positive perspective. The fact that it could have been worse, we probably will be at 2,000 naira later today. We're still at 1,000 to 1,300. If things don't destabilize further, I expect the prices to decelerate. But I think people have shown enough resilience that we can cope with these things.
Recently, the managing director of Dangote Petroleum Refinery, Mr. David Bird, briefed the media stating that we are fully exposed to the international commodity market. That needs to be widely understood. We purchase, even under the crude for Naira program, we purchase Nigerian crude from the Nigerian government at international benchmark-related prices. He added, we then pay international freight rates and international insurance rates to bring that crude from the terminal to the refinery. He added that the Nigerian crude accounted for about 30 to 35% of the refinery's crude intake, with the balance sourced on the open market in the United States currency, the dollars, often passing through multiple traders before reaching the refinery, adding further costs. So a significant takeaway is that domestic refining is taking its course in the country, as other refineries can also play a vital role in the industry. I engaged some economists, business leaders, and technocrats on how the businesses and households can adjust to the geopolitical developments, oil price shifts, the PMS pricing dynamics, and what policy interventions are critical at this point. Take a listen.
Upon the inception of this administration, when Mr. President said what he said about the removal of subsidy, at that point, it was imperative that anyone whom would want to consider themselves as going concerns or residents in Nigeria would have to adjust, because of, and you could hear what the CBN governor had said in that light as well, because a lot has happened in the past. And, in order to make the desired progress, everyone needs to practically tighten up their belt a bit. And essentially, it's the ripple effect of all that, of all the informations that are going on in the system that has made it seem as if, that's become unbearable. So nonetheless, it can only get worse before it gets better. That is our hope. And we're also appealing to everyone, including the administration, the government of the day, to ensure that some of all these reforms are properly communicated, to the citizenry, so that they don't see it as if the government does not have a humane face.
There's no doubt that the war in Iran was going to have this effect on the pump price of petrol, because it's just logical that when the price of oil goes up, then the price of refining and the price of delivery will go up as well. I think the advice for everybody and every household is to start to plan your movements. When you don't have to be on the road, you stay off the road, because there is no doubt that costs are going to go up, and the only way we can manage and sustain the current economic hardship is to cut costs. So, I hope the government will rise to the occasion and put palliatives in place for people to bear this brunt. I'm aware of a state governor, for instance, that has given free bus rides on buses that are powered by CNG gas. That's the kind of thing I want to see in Lagos State as well, and nationwide.
With the oil prices trading at about over $100 a barrel, the pressure with that is inflation. Now inflation is down to 15%. How will that impact inflation? Will it spiral? And this is really where the government needs to manage and tell us how they're going to get things working.
Sometimes when you see these shocks, sometimes we can take decisions without really thinking about it. We all pray this is short-lived, so therefore this should only be a temporary thing, because Nigeria has been on a strong path of growth. We know this will have an impact on inflation, on prices, on interest rate, but we're all hoping it is temporary. So what that means is that every business now should prepare itself for this short-term shock. We should not allow it to derail you. Prices are bound to go up, so you yourself must be able to cut your coat according to your cloth, and that's all one can say. But the fundamentals are strong. Their fundamentals are strong. Our businesses are quite resilient, and the key is, and the lesson all of us should learn is that shocks can come at any time. So when you are building your business, also make sure you give room for what if this happens, and never be so optimistic because things have been benign and things are working well. You now believe that it will always be so. No, there'll always be this kind of shocks. And the lesson for all of us is that build that kind of redundancy within your business, that when shocks come, you can absorb it.
Once inflation comes down, we can restore purchasing power, we can cut rates, and we can begin to put growth policies that will grow the economy at 8 to 10% on a sustainable basis. So that's what we really need to do. By doing that, we will lift 140 million Nigerians out of multidimensional poverty.
Meanwhile, the coordinating minister of the economy, Mr. Wale Edun, issued a statement recently on how the geopolitical conflict in the Middle East will impact Nigeria. He outlined 3 transmission points, which include crude oil and gas prices, capital flows and financial markets, global logistics, and supply costs. He noted that the downside risks are worsening inflation and cost of living crisis. And this is not just about Nigeria alone, but across major economies. From the policy side, he assured that the economic management team is maintaining close coordination across fiscal, monetary, and energy policy institutions with policy options under continuous review to mitigate volatility and shield households and businesses from external shocks. This is very important at this time. From these developments, it is clear that inflation will be impacted, and we will be tracking the February 2026 inflation rate, which should be released later today. That will be from the National Bureau of Statistics, and ProShare will be monitoring that. Globally, the cost of living will come under watch in Nigeria, from transportation to food items. We're also mindful that this is the pre-election year. A clear signaling for households is the need to review costs and cut whatever is waste and diversify income. Businesses will have to optimize costs and strategize ways of achieving efficiency amid the disruptions and the rising costs of PMS and other related costs. The government, just like the Minister of the Economy has said, will have to be proactive and explore incentives, short-term palliatives, and scale the alternative energy sources utilization for transportation and other infrastructure to address costs for citizens. The hostilities in the Middle East, if it lingers, will accelerate the disruptions in the global energy market with huge consequences for economies. Households, businesses have to be innovative, while governments must be proactive and very strategic at this point. And that'll be all for this conversation. To our viewers, if you want to get further insights on this, visit the ProShare website displayed on the screen and follow our social media platforms to engage further. This is to inform our viewers that the Economic Associates and ProShare Economic Outlook Conference is coming up and is scheduled for April 16, 2026. There will be practical insights into navigating socioeconomic challenges like just raised now, the geopolitics and all the developments, and how it will be useful for businesses and subnationals and the federal government to navigate. To get further insights on this conference coming up, log on to www.proshare.co to get further insights. To become your way again, enrich yourself with the knowledge of socioeconomic developments around you because it is a wise thing to do. I'm Ottoabasi Abasiekong. Thank you for watching, and bye for now.